Allez, Paris. Paris est magique. Was this the wrong show for it?
Bonjour. Oui, monsieur. Oui.
Good day and welcome to Crypto EMC, guys. I promise we talk crypto and not football. Today we're going to be looking at a guide to buying the dips. We're going to show you the important things that you should always be keeping your eye out at, because emotions does govern the market, and the market is today feeling like the worst is over. Everybody is feeling like it's time to reclaim our position on the spaceship that's on its way to the moon. My name is Rudo, also known as the chart artist, and with me is my buddy Fibonacci Lee. How are you doing, my friend?
I'm good. I'm excellent. Thank you. I can't wait to be tonight, but yeah, let's do this episode first.
Yes, let's business first. So guys, sit back, relax. You're in good hands, and let us show you how. Cool, guys. So before we get going, please hit those likes and subscribe buttons. YouTube needs it to take us serious. We need it to make sure that we can help more people. And in the end of the day, it's what got us to you in the first place. Somebody else sharing, liking, and subscribing. So share the love, please. Lee. Yeah. So we had an insane rally yesterday. Bitcoin really pushed up.
Insane.
V recoveries. Guys are talking about V recoveries. What is a V recovery? Well, I'll quickly show you on my screen, guys. When something just does this and then goes up like that. Possible, but let's have a look at how that can play out. So people are talking V recoveries, and but what you've done, Lee, is you've created a guide for us, guide on to spot this and how to protect yourself and get in, when the market allows for it.
So the idea is to create like a kind of checklist on what to look for every time we have a dip. Big or small. Because market always to correct, nothing goes in a straight line. So this is the kind of information that I'm looking for every time the market is dropping, in order for me to be more confident and to call the bottom or the temporary bottom. And I try to make it as simple as possible with the help of Rudo, and we're gonna share it with you today. I hope you are excited.
But before we do that, please remember always to slap a fib on it. Right, Lee. So that guide, let's quickly talk about the guide. Before we show it on the charts, just talk us through it in your words, how it's going to play out. And before Lee does that, guys, remember there's some fundamental analysis coming and later half of the show. So please don't miss that out or miss out on that. We're going to be telling you why and why it's important to be looking at this specific project. Okay, Lee, buddy, that guide, what do we need to do?
Well, when the market dropped, when the market had a big drop, I would like first to go and chant which time frame I'm gonna look for it. So the bigger the time frame is, the better. And basically, you wanna see. I always follow this RSI. Are you sharing my charts, Rudo? No, I don't think so.
No, I can quickly bring up your screen there for you.
So, for instance, here I'm looking at a bigger time frame first, and then I'm gonna go into a smaller time frame. Okay, but basically, I want to see the RSI coming below this 30, this oversold area, and then I want to see a bounce from this area. So if I'm looking at the fib, and in conjunction with the RSI, I want to see first this RSI going to extreme, and then after that RSI coming back and giving me a strong bullish divergence. Okay, I'm gonna come back to those divergences again and over. Strong bullish divergence means we have a reversal of a trend. Okay, so for now on this BTC 4 hour, we don't have a strong bullish divergence right now. So it means that for me, nothing has been confirmed yet. We did hit the oversold area, but I need a sign that is reversing this trend. And at the moment, the trend is still bearish. The momentum here is still bearish. Okay, so once I've got this, I don't have this, but now what are we looking at? What do we have on in terms of RSN divergences? 4 hour here, we're gonna hit, and it's gonna end up in 18 minutes. We will have a hidden bearish divergence. So like I said, now we are coming slowly and surely to the enemy territory. Why? We have a hidden bearish divergence. Hidden bearish means that we have continuation of the previous trend. And
we're outnumbered, basically. It's showing that
as far as I'm concerned, the trend, the momentum here is bearish. So the bears will use that hidden bearish divergence in order to try to kill the bulls one more time, to push more pressure when they have this confirmation of the hidden bearish divergence. They want the continuation. They want to push the price as low as possible, right? Second sign here, I want to see from the top to the bottom, the previous top to the bottom, the current bottom, wherever you are on this chart. I want to see from using this Fib tool, first click here at the top, second click at the bottom. I want to see where did the bears manage to push the price up from here.
But Lee, let's maybe park it there and take it just a step back quickly for anybody that is new. Because we're starting off based on a knowledge base that we kind of already know what we're doing. So I just want to take it a quick step back, and I apologize for interrupting. The important thing is that I just quickly want to do before we go in. So this is now my chart as well, and it's not zoomed in anything. So, but I want you guys to just go and get a clean Bitcoin chart and track this while we talk, if you can, if you've got multiple screens. Draw that simple trend line. You just need to follow the tops. A simple trend line, because that is actually a moving average. That's all that it is. It's just showing you where the momentum is going to. And then I want you to go to your indicators at the top there, trading view. And you can click on it and you can literally just type in RSI. And then that will bring up the relative strength index for you. Now mine is at the bottom, and yours should by default jump on at the bottom. What we can do is I'll just delete the previous one that I had. You can click on that little arrow to move it to the top to mimic Lee's screen, should you want to. And there's a little arrow back to move it back down, should you want. And then from that point onwards, I want you to write down this. One, what do we have? There we go. There is number one, the hidden bearish divergence that's playing out. Okay, and then from that point onwards, I'm going to give it back to Lee, and then I want Lee to continue on with this. Okay, buddy.
Okay, so now we have a first sign for the bears that they can come back to the game now already at that hidden bearish divergence for continuation for the move for the price to go down. And secondly, if you use the Fib, where are we going? Where are we gonna see resistance area? We have first resistance, small resistance at 23.6, but very important is 38.2. I don't know if you remember, I always say there's a guideline of mine that if you lose 38.2, you're gonna probably go to 618. But for that, you need to lose the 38.2 level here, which is at about.
Do you mind zooming in fast, Lee?
52.
Just make it nice and big. Use that little zoom tool and get the candles in so that we can see the candles and the levels actually. So what we can do is the 618 line is that blue turquoise line of Lee's.
Yeah.
And the 38.2 is I think it's like a pinkish color. Maybe make them gold just for the example. And there you've got the values there. So now it's nice and easy to see. Okay, cool. Thanks, buddy.
So in terms of localization, we're coming back to this 38.2 line. So that is the first area of resistance for the bulls. Okay. So if I am a bear right now, if I'm playing with the bearish scenario, I will use that hidden bearish divergence here and the 38.2 and try to add more position on my shorts at before that, or I can take a small trade and push and try to push the price even lower than this pivot here. Okay, so these are the two signs that I have as a bears. But now we want to see if it is the real bottom here, right? If you want to see the real bottom here, what is supposed to happen is at one stage, those hidden bearish divergence will not work anymore. So it's important that this hidden bearish divergence that's coming, maybe it's going to come with 1, 2, 3 wave down, and it's not going to make a lower low. So it means that already one of those bearish signs is not playing out already. Now we know that the bears is losing momentum. So maybe now the bottom of that current trend is in, and the bulls will have more confidence to take any strong bullish signals and try to fight back. It can be the strong bullish. The strong bullish signal can come in 4 hours. It can come in lower time frame. So if I'm in the chart, I will go back into lower time frame, maybe 1 hour or even 15 minutes, to see any strong. It can come back here, make it oversold. Same concept, guys. It comes here, oversold, boom. I'm waiting for another strong bullish signal to take position and to fight back the bears and try to play with the bulls again. Okay, so that's why you need to play with different time frame as well. So that is already how many checklists now? How many?
That's the second. So we've looked at now.
Only the second.
We've looked at the first thing. So remember now, guys. I'll just quickly remind you. Number 1 was the bearish divergence. Okay. So number 2 now is we are looking at where the bears are going to want to fight back. They're currently fighting back at that level. So now we're going to move on to number 3, which is now going to be, so localization, number 2, I'm just going to draw it there. And remember, guys, simple as that, just put a fib level, use your fib from the top to the bottom. And if it's between those two golden levels, that's normally the localization that Lee looks at. That's where the things happen. So the first little bit of short's going to happen at the bottom. The second bit of shorting might even take up us to the 618. Now we're going to go down again, hopefully. Let's see what Lee has to say. Okay, buddy, back to you.
Okay. Now if we're going down from the 38.2, if we're going down from here, and then I just said, if the bears are losing momentum, they're probably not going to make a lower low. So if this lower low, the lowest point here at 41,000 here, if we're going to hold this low, it means that its hidden bearish divergence is not going to play out. Right. Now, if we have a smaller time frame signal for a strong bullish divergence, we're going to push the price up. And what we want to see, this price going up, and we want to see this price making a higher high. This is when your higher high is coming in place, Rudo. So if the price action comes back and make a higher high, goes into the 618, maybe they're gonna lose another battle here. We're gonna come back, but then when we're gonna come back, you have already a higher high. You wanna buy this supply zone at the bottom.
Demand zone.
The demand zone, sorry, yeah, the demand zone at the bottom. So the third signal that we wanna see the bears failing to put a lower low.
And the bulls getting
a higher high. The bulls, after that, the bulls need to push its RSI above 70, overbought area in those specific time frame. Why? Because as soon as the bulls push this RSI to over 70, in my mind, this is not the top. In my mind, it can be another high coming with a strong bearish divergence. Right? As soon as they delete any kind of divergence, the RSI is going to the top of the box here, assuming it goes there. I already know that this coming is a reaction, is a 3-wave reaction down, and then maybe another reaction up on RSI, and they will have to give me, if we do something like this, they will have to give me a higher high in order for me to play the bears again, because then I will wait for a strong bearish signal. So if the bulls within that fight can push already here over 70, it means that whatever I do here, chances are very small to me to print, for me to win the battle. I will still have for wait. I will still have to wait to come for another higher high. So this is when your higher high comes, Ludo, and when that higher high comes, now we have this kind of structure making higher lows. Now this is when your strategy comes, Ludo, and then you want to buy this demand zone. And
that is correct.
With the hope that this low is gonna hold, right?
That is correct. So to mark it out clearly for you guys, remember now, one, bearish divergence is currently in place. So please don't get your hopes up that this is the one that's going to take us back to 60. At the moment, this price needs to go, and it needs to go very high in order for us to remotely get to a point where we're going to delete that. And I want to just bring your thoughts back. Remember, guys, we had higher high to higher high to higher high, not getting triggered each and every time. That's how we showed you to get out of the market. That's how we helped you guys in the past. So what worked there is still going to work here. So our higher high level is currently sitting at on Bitfinex US dollar at 59,174. So you can go to any exchange and go and just mark it up. See which one of those wicks is the higher high. Why? Because then we are busy going into the shorts promises. Okay, so that's the thing. So now what Lee is showing you guys is simple. We're going to maybe try and attack this trend line. Let's change the color on the drawings so that you don't get. So we might just go and attack this trend line. And on our way back down, what do? We've now created a high. We're going to come back down, and we're going to go and create a low. That low is going to sit within this imbalance area over here. Boom. We're going to come back and make a higher high, come back by the demand zone, and probably from that time go back on. Now, there's no rule that says this can be 1, 2, or even 3 times that this happens. This can happen multiple times where we keep on doing this as the market needs to absorb the supply to go on. So you should not just use it as simply it does this once and then we go. It can do it 2, 3, 4, 5 times. The more it does it in the end of the day, the stronger the impulse and the direction away the move out will be. So just keep an eye out on that. So number 1, we've now given you guys the number 1. We've given you number 2. Remember now, this can set up, can go there, or it can literally just come down here, test this area over here, not make a lower low. We don't want to see a lower low. And then from that point onwards, what do we want to see? Mark this as number 3. I want to see the higher high, which would be number 4. Once we have the higher high, we come and we buy the demand zone. And we will help you to get the demand. There's no way that I can show it now because, like we explained to you guys with poker hands, the demand needs to first print. The table needs to show its hand before we can take it. And then that's how we navigate this. Lee, did I miss anything?
No, perfect for the scenario 1. but what if you come back and make a lower low? Okay. What if the bears win the battle and we make a lower low? Then we repeat the same concept, the same process, and it's just gonna be another level low. And you just have to change the level of your Fibonacci tools, and you have to adjust. And the strategy is gonna repeat over and over. Simple.
This is where most people get stripped up because you see this once. Now it works. Okay, it's good. And then the second time it fails. And then instead of just reapplying it to the new level, they give up. So please don't do that. It's going to happen. We were waiting for this to play out on the previous level when we were sitting at 54. We were looking for this.
Do you know why the previous level has failed, basically?
For me, the big thing was we did not make a higher high. Supply held.
Okay.
Bears kept winning more ground. That was the big warning sign. For you, Lee?
Leverage, funding rate, leverage. Everyone was still very bullish at that time. And the bus was kind of still full. No one was wrecked, and no one, I mean, it's sad to say it, but this is basically how it works. No one get wrecked at that stage, and people were still, you can look at the liquidation chart at 54. No one got the liquidation was so small, and now at 42, that was a big liquidation. So right now, the leverage is almost at the bottom. If you want to share another chart, Udo. And then this is like more like order book analysis. All right, and I'm using here trending lights. You can see here the open interest. Again, open interest. When we were at here at 51, interest was still close to the all-time high. With that move, now the open interest is coming at almost all-time low, 37. It's almost at the bottom here. Now this move has hurt the market. The one before here, the open interest, everyone was still holding position here. Okay, this is a real shakeout. Now open interest is low. So on top of this TA analysis on your trading view chart, I also look at this really important, because on the short term, the market is dictated by these market makers. If the market makers doesn't want to move a finger, doesn't want to trade, then it's going to be boring. The price is going to just hover within this $2,000, because the retail people, you and me, we are not strong enough to move the market. So keeping an eye on what their plan is and what they want to do. Simple. What do they want? They want USD. They don't want Bitcoin. It's for them, Bitcoin, Ethereum, or whatever, it's just a trading asset. They want to make more money out of the market. So they want your money or your BTC, whatever. But when the open interest is low like this, it means that they don't have any interest in the market right now of moving the price high or low, because there's no gain. Okay.
They don't want to fight the market either. Remember that, guys.
There's no gains for them. So they're just going to let us play, let the market, let the people, put the bets on the table. Are we longing? Are we shorting? If people will start to short now. So that's why my first checklist is, where is the open interest, high or low? If it is high, you better be careful. It's gonna move. It's gonna move to the north or south. You don't know, because this is only the amount of leverage that is on the table. It can be short, it can be long, but here you will have the long versus short.
Lee, you're gonna have to zoom in there, buddy, because none of the text is visible. And
what the text is it doesn't.
You're gonna have to zoom in on the browser as such. Because
this is the long versus short. Basically, it's not on everyone's chart.
Okay.
But basically, when it's red, the majority of the market is shorting the market. Majority of the people is shorting the market. When it's long, majority of the people is long in the market. Okay, and the majority is always wrong. And you look at the funding rate. Yeah, and you look at the funding rate. Funding rate and long versus short should give you the same data. So the danger is now we are at the resistance. If people start to short this level here, it's actually good, because if the majority of people is going to short these things here and not make a lower low, now the market makers got promises and money for people to buy it at higher price. So they will push the price higher. But if people start to FOMO in right now again at the resistance area, and they're going to open a lot of long position here, then the money is going to sit below the stop. So the market makers are going to push the price down to get those stop losses and liquidation again, to shake out one last time and make sure that there's no one left in this bus, so they can run away.
So they're going to make it hard. No, it does make sense. But now, let's quickly go to a lighter note. Thanks a lot, Lee. Open interest master. Early supporter role. Let's talk about that. So every day on the chat, we select a new person to join our early supporter role. Guys, so please type in, I want to be an early supporter in the chat for us. And Joe backstage will go through the comments, select one. And at the end of the stream, we will announce it and you get joined in onto the Discord early supporter role. Remember, guys, that there's additional benefits going to be going your way if you become an early supporter. Lee, all admin that we do, let's maybe talk about a project that's really exciting. It's been getting a lot of scrutiny a while ago. And the project's name is Cardano. I am very bullish on Cardano, despite the fact that all my Cardano buys failed. I'm honest about it. I mean, I was looking at levels to buy. But remember, guys, there's 3 players to stuff. There's fundamental analysis gives you the why. Technical analysis manages your risk. At that stage, the risk was worth it, and I took it. And then the last part is timing. So the fundamentals has not changed. The technical analysis is still intact. We've got new targets when they play out. And we need to talk about timing. So today I want to touch on Cardano for you guys. Now, Cardano, for those that don't know about Cardano, there's, I think, a few things that you need to take away when we talk about Cardano. And let me just quickly remove this and bring up our feeds. Cardano, its native token is ADA. You all should know by now. And ADA is a proof of stake. It was engineered to be a proof of stake system from the ground up, which makes it a little bit different to Ethereum. That was a proof of work token or coin that migrated to a proof of stake model. Now, the thing about all crypto coins that's really worthwhile, they suffer from 3 big problems, which is scalability, interoperability, Lee, say that 3 times quickly, and sustainability. Now, the thing with scalability that makes Cardano unique, and this is the big takeaway that I want you guys from Cardano. Cardano has this epoch system that makes the ecosystem faster as it grows, as opposed to a lot of them, and mainly Ethereum suffers from this a lot, where it gets slower and more expensive as it grows. So this is a real good advantage to Cardano. And what it does is it uses the growth in the network to actually increase the computing power. So we might be comparing Cardano's amount of transactions per second to other blockchains out there. But remember, those transactions per second are capped at that blockchain speed, where Cardano can grow infinitely. It can only get faster. It should excite you. Maybe, maybe not. But Cardano at this stage is, regardless of all this, in a real good area to start dollar cost average investing into this. Then I want to take you through another thing about what makes Cardano so cool. So when we look at the interoperability, Cardano knows that there's always going to be other coins. Now, the best way to explain interoperability with you guys is when we think about Apple, Android, Apple phones versus Android. We always know that there's a big divide between it, and you can look at them as being their own blockchains. Apple phone does not really, if you go from Apple to Android, it's hard and frustrating, and you always need to bridge some sort of software to help that. And that's the same that happens with blockchains. You can't just jump from one blockchain to another. It's impossible. And if we're in a world that's going to grow and we want network and we want connectivity, we're going to need these bridges. So what Cardano has is they've built those bridges already in hand from the ground up. So the need to just keep on bringing new solutions, they've already addressed it in the groundwork. Another good reason why I like Cardano. And then sustainability, the way that it keeps its lights on. Remember, there's a lot of these things where Ethereum uses the GUI, which is basically Ethereum's Satoshi, to allocate what it costs to make a transaction. And that amount of GUI is allocated and decided on, and you don't have no control over that. Where Cardano uses a treasury system that rewards everybody. So it's a complete different model, but everybody still gets paid, but it does not impact your wallet. That's why Cardano is way cheaper. So the nice thing about this now is, with a little bit of background of what is Cardano, and I mean, I'm glazing over the thing. It should excite you in the sense, because it's at this stage nobody's favorite blockchain. Lee, we say this a lot. We want to buy when it's unknown or forgotten, and we want to invest then, and then we want to wait until it becomes mainstream, big news again, and that's when we need to be taking profit. Now, there's a few things I want to share with you guys that is up and happening with Cardano at the moment that's quite big. So, firstly, price-wise, Lee, look at this. When we look at this and we apply the rules that we said to you guys, the guys are buying the dip. Is Cardano a buy at this stage?
No one wants to buy Cardano. I mean, I think they've got a lot of haters out there. The community is strong, but yeah, everyone is saying that they're gonna fail or they don't have any working protocol and it's only empty promises. So it's a lot of negativity.
We're going to debunk that today.
Okay.
So TA wise, it's not a buy. Let's be honest, but we've told you what you need to be looking at for. So
no, TA wise is a buy. It is a buy TA wise.
Well, I don't know. Where's the higher high?
Oh, there's a strong bullish divergence on the. Yeah. Not a, I mean, not a trade, but you have a strong bullish divergence on daily. We are just above the. We are just above the dollar cost averaging range from the all-time low to the all-time high. So for now there's no better place to invest in Cardano or TAOS. You can come down a little bit, but if you believe in
I think we're
projects,
just speaking past each other. I meant trading wisely. Investment
trading wise, no.
It's TA for investment. We're in close to the dollar cost average range. TA wise for trading, it's not quite there yet. That's what we want to get at. Okay, cool. So I think we've just cleared that out. Okay, cool. Now, what I want to show you guys is Muesli Swap. Muesli Swap is a decentralized exchange, and what makes this one unique, it's on Cardano, and it's on the Binance Bitcoin Cash smart chain. So it's on two chains, and the main takeaway that's very unique to this one is it uses an order book model, not an automated market maker model. Now, automated market makers like Sushi Swap, which is the other one, Pancake Swap, and the big one, Uniswap. And the big takeaway and the scary part about that is actually you can still get rug pulls. Now, there's many ways to do rug pulls, but I mean, the big thing is you can still have liquidation rug pulls where you literally can't sell. There's nobody worth buying in the other end, which makes it risky. So this one uses an order book to do that. So it's a complete unique difference to it. They launched, I think, the 29th of November, so it's still quite new. And I want you guys to go and check it out. Just go check it out. We'll dive into this at a later stage to do a little bit of a deep dive. I mean, we're running out of time. We've spent so much time looking at Bitcoin and our favorite child that are, I think, fundamental, our vegetables. We're going to have to force them down. But I mean, this is important that you remember that this is happening on the Cardano network. Secondly, I want you to we shared a project with you guys a while back, and this was liquidity. And I explained to you guys, and we looked at liquidity, and Lee did a big markup for you guys. And thank goodness, because at one stage we shared it with you guys. It didn't quite go to our buy zone, and then it just went. And the hard part is when we have this area, you can't FOMO buy in, and liquidity went to $30. And now finally it hit the buy zone. So for anybody that maybe missed that, please go and have a look at liquidity. Currently $6.40 is a really good average place to buy. And with what we're seeing within Bitcoin, we might be going back to that zone soon. So liquidity is in a really good area. And what liquidity does, guys, the long story short for liquidity is it's a decentralized borrowing protocol that allows you to draw 0% interest loans against your used collateral. 0% interest loans. And that's their way of capturing liquidity at this stage into their protocol. So just remember that this is something that's new, something that's exciting. And for anybody that wants to be borrowing, they're going to be looking at this because they've got 0% interest for the next period of time. And with
where do we buy liquidity? Where do we buy liquidity?
You can go onto Uniswap and just buy it on Uniswap. Please don't get trapped. Go to CoinGecko first, guys. Get the contract address there. Don't Google liquidity and get a fake contract address and send your money away to some guy living on an island. Please be careful about that. Always do it this way around. Go to CoinGecko, get the correct contract address, add it to your MetaMask, and there you go. Okay, so liquidity hitting our buy zone. Really good project. Really happy about this one. And because if I looked at that spike to $30, I was cringing. I mean, we were making higher highs. So thank goodness the market kind of reversed on us. Okay, then I want to show you guys Sunday Swap. So Sunday Swap, the testnet was going to launch the 5th of December, this Sunday that just passed. And this is another trading protocol on Cardano that's launching. Now, what makes this one different to the others is that it's got an automated market maker that prevents rug pulls. So you're going to be way safer than this. So it's always going to make sure that there's liquidity to enter and to get out. So you're not going to struggle with that, because we all know when it comes to decentralized exchanges, sometimes frustratingly, you can't get out. The range to where you're going to sell is going to move the price too much. So this is quite unique, and I quite like this one for that reason. Then we were looking at, let's just quickly get my notes here. I was looking at Parva. Now, Parva is a metaverse on the Cardano system. Their first round of plots have already been sold. There's 40,000 new ones coming up for grabs. And that's going to bring a lot of new liquidity and a lot of new attention to the Cardano network. And then in conjunction with all this, and I just want to show you guys that at this stage, Cardano, despite what everybody's saying, has just crossed 1 million wallets staking. So smart money is still looking at Cardano and putting its money in there. And then the big thing is, Lee, you said it actually, you set it up. Cardano, nobody says that it's not really doing anything. There's no real usage at the moment on the Cardano network. But they've got partnerships with Tingo and with Boost Mobile already in place. Now, what Boost Mobile basically does, Tingo is linked to Meld, which is trying to create cash loans, but also a gold-backed coin. But Boost Mobile is trying to create the first system where children will be able to go online and watch streams, but be safe, be protected. So it's a protected service behind it. Now, this is a real company. It's currently running, and that's what they're doing in the background. So exciting stuff to have a look at. So with all these things considered, if I'm looking at Cardano and I'm looking at this thing big picture, and I'm saying to myself, fundamentally, there's so much things happening in the background that does not necessarily see the light of day, but it's there, it's playing out. You guys can go and have a look at it. I am really getting itchy to grab a little bit more Cardano. And just to show what Lee was talking on about, when we look at the bottom, we look at the top, Cardano went to that 1618 as a golden ratio price point. But this area over here would be Lee's dollar cost average investment range, everything from that top line there. So we don't know where the bottom is in. I don't know whether I should be buying, trading just yet. The risk is relatively low, but I'll keep an eye on Cardano. And when it's in this range, I'm definitely going to be acquiring more Cardano. Okay. That's me. Lee, are you going to be buying Cardano or not? Or do you have your eyes on that liquidity?
No, definitely. Definitely more Cardanos. Don't have enough. I mean, it's a one that I'm looking. I was always, looking and following since 2017 tier wise, and it's almost like those bad news for me. It's almost like good news. I wish there would be a big bad news that's gonna shake a lot of people out, and all those people that were holding Cardano for 3 years and wanted to go to $10 or whatever, they must a little bit maybe sell a little bit more. I don't know, any kind of bad FUD news on Cardano. Shake the most people out, and then maybe we can go much higher. I still feel like Cardano community is strong, but XRP community was also very strong until this SCE FUD comes out, shake a lot of people out, and then only then after it went for higher. So let's see what Cardano is got in the boots for in a boot for us.
You can't be over-invested, but please, you've got a lot of intel. Go and have a look at this, and yeah, let's get some. Let's see who's our early supporter for today. Joe, pop up that name for us. Let's see who's going to be joining our early supporter role. And while I wait for that name to pop up, please go to the Telegram, to the Twitter channel, crypto_EMC, and send a DM, T Jarvis, and send a DM, and Joe will then connect you and get you on that early supporter role in the Discord. Okay, great. Now, Lee, what are we going to be talking about tomorrow? Do you have an idea?
How PSG played tonight.
So tomorrow we're going to see whether PSG is going to win or not. So that's going to be a big one. So stay tuned for your PSG update, fresh from Fibonacci Lee. And
or I can continue to give you some French lessons.
Yes, and I'm going to be getting more French lessons. Guys, let's bounce.
Have a nice day, guys.